But Sumit, the stock that has been in focus today and on everyone's mind since the get-go is HDFC Bank.
Well, yes, the stock was down around 7% which is most likely its biggest fall that we have seen at least since May of 2023 or even beyond that. And the only reason behind that is the drop that we have seen in the LCR ratio of HDFC Bank from 121 to 110%, because results were pretty much in line with what the street was expecting. Now Gaurav is joining us to give us more details on the same. Gaurav, what was the actual pain point for HDFC Bank?
Yeah. So first, if we talk about the operational data was quite strong. It was up 4% if we talk about NII and pre-provisional operating profits. And PAT was also up almost by 2.5% in this quarter. But when we talk about the other data from the bank, what is happening right now is that the deposits are under pressure. So we have already seen that the deposit growth was almost at 1.9% on a quarter-on-quarter basis, while advances grew almost by 5%. So this is putting some kind of pressure in the liquidity for the bank. If we talk about the loan to deposit ratio, now it stands at 110% versus what it was at 85 to 87% earlier. Even if we exclude the impact of the merger, the LDR ratio stands at 89% according to the bank. And this everything will, and if you also talk about the CASA ratio is also down at 37.7%. And all this has caused the NIMs to come up to 3.6%. Now let's note that NIMs have been at 3.6% last quarter as well, but these are at the lowest level in the last few quarters. And going ahead, bank also believes that the deposit growth rate has to outpace the growth in the loan book to come up to support the NIMs going ahead. They also believe that the CASA ratio needs to improve almost to 40%, and because this will somewhere support the support the bring down in the borrowings in its total liabilities side. And all this will support NIMs going ahead. But what brokerages are believing is that this process is a long haul process and this will take some time. It won't happen in this quarter or the next quarter. And that is why we are seeing this kind of negative impact coming up on the bank's target share price today. But all in all, if we talk about the brokerages, they have not changed their view. They have not even changed the target price. So if you have to highlight a few, first we have is Axis Bank, where they have maintained the buy rating with the target price of 2,030 rupees. We also have Morgan Stanley, who has maintained its overweight rating with 2,110 rupees. And on the lower end, we have Nomura, who has cut the target price to 1,625 rupees while maintaining its neutral rating. So all in all, it seems that brokerages are still being cautious with the bank's growth outlook, and that is what is driving the stock down, at least in today's trade.
Gaurav, thank you so much for that update. That's why, we're seeing a bit of a pressure coming in on HDFC Bank. And that is why we will be discussing today with our experts as well in terms of what should we be doing with HDFC Bank. Now, do you see value and is it attractive to buy it? We'll be joined by our experts today. We do have Saurabh, Jain, as well as Hemen, Kapadia joining in with us as well. But, before that, let's go across. Saurabh and Hemen, do wait on with us, because listening to what Nikunj Dalmia, the chief editor at ET Now, had to say in terms of HDFC Bank, and what's his view on that?
There is nothing wow about the numbers. There is nothing exciting about the numbers. If at all, cracks are now opening up in terms of what the HDFC Bank positioning and what the delivery has been. I think for the first time after many quarters, you've actually seen the first year-on-year EPS decline in a decade. And there is definitely a pressure which is building up because of what is happening in the entire liability side, which is the cost of deposit, and growth seems to be getting challenged for HDFC Bank. Now, it is a stock which is unlikely to see any re-rating in the near term. It's a stock where positioning is just one-sided, which is everybody is just hoping that HDFC Bank will actually catch up because of months of underperformance. Now that's the positioning. So the stock post these numbers is unlikely to move higher like what IT stocks did. The general mood point at the beginning of the week was that buy stocks ahead of the numbers. The kind of move what we've seen in IT, we are likely to see that in bank. But looking at HDFC Bank numbers, I don't think we are in for a bout of short covering. If at all, I think HDFC Bank, which has been a ranked underperformer, that positioning of HDFC Bank is unlikely to change. So if you're holding on to HDFC Bank, I guess you should not sell. If you get a bad day, if the stock falls for 5%, you should add more. But to assume that there is going to be instant gratification and you will make very smart gains by buying HDFC Bank in next 2 or 3 months, I think that really may not be the scenario. And if at all HDFC Bank now post these numbers, it's unlikely to be that outlier or the outperformer. So I think the wait and watch mode continues for HDFC Bank. Frankly, these numbers do not warrant that kind of an excitement. I mean, they are just not impressive at all. A franchise like HDFC Bank, when the economy is so strong, everybody has come out and cut their EPS growth targets and also the growth targets.
Okay, and now let's go across to our experts who are going to tell us what should we be doing with HDFC Bank now. Hemen as well as Saurabh, very good morning and thank you so much for joining in with us as always. And, Hemen, I've just seen the price, and HDFC Bank is something that has not done anything exciting in terms of a stock move. Now, obviously, in terms of, numbers, we're seeing that impact coming in because of the coverage ratio that's there. But is it attractive now to look at HDFC Bank from the private banking sector? Do you see more value now compared to other private banks here now?
A very good morning to you. Thank you for having me on the show. It's always a pleasure. If you go back, if I can digress just a wee bit, Vinny, if you go back in time, if you look at the last 20 years, normally it's HDFC Bank and Kotak which have led the bank nifty and the entire banking pack and the private bank pack. PSUs were dead for almost 18 years, but it's always been HDFC, Kotak, Kotak, HDFC. If you see the history over the last, I think post-COVID, maybe 2021, there has been tremendous underperformance, abysmal. So frankly speaking, that hasn't changed. Why I went back in time is because I think there's a new order emerging. These guys were leaders for 20, 25 years and now they're taking a breather. So as of now, it remains in a range, Vinny. The range is between 1270, I know it's a big range, 1278 on the downside, 725, 1725 on the upside. And believe me, this range has been going on for the last 3.5 years. While the bank nifty has gone in the stratosphere, ICICI Bank, Axis Bank, many stocks have done phenomenally well. This bank has gone nowhere. So frankly speaking, nothing changes in terms of levels. 1560, 1512 supports, resistance 1590, 1645. This huge downward gap does not augur well. This will provide resistance. Until it isn't covered up, I think parity won't be restored. So I'd say currently nothing much to go for it. It would need some time. Maybe it's a knee-jerk reaction, but these levels need to play out. If 1560 breaks, which I don't think it will in the near term, if it does, then we are in our spot of bother again.
Saurabh, how are you looking at HDFC Bank? Do you expect the earnings to bottom out and they could rise going forward now?
Hi, good morning. Thanks, thanks to you for having me on the show. See, what I feel is in the last 3 years, if you look at the HDFC Bank, it has clearly underperformed both the Bank Nifty and the Nifty. And the stock is up by close to 7%, whereas Bank Nifty is up by approximately 25-30% in the last 3 years. I think probably the consolidation, the underperformance will probably continue for some more time, and probably 2, 3, 4 quarters. And I think probably the stock will oscillate broadly in a range of 300, 400 rupees. See, what markets are expecting, what markets are, wants HDFC Bank to deliver, I think it will take some time. It will take some time for the bank to shed out the higher cost of borrowings because of the merger with the HDFC Limited. And I think as the time will progress, as the numbers will improve, gradually the performance will occur on the purses. So I think nothing to cheer about the numbers, but broadly the numbers are in line with the market expectation. And I think the stock will continue to underperform.
Well, thank you, Saurabh. Thank you, Hemen, for giving your view on HDFC Bank. With that,